Hello, guys, and welcome to the 66th, edition of the Trading Opportunities webinar. This is Nirav, and let me just quickly check the audio at my end. Also, if you guys are currently listening to me live, one second. Yep. So the audio at my end looks to be working fine. So the audio at my end looks to be working. Yep, it is. So, hello everyone and welcome. Let me see if people are there in the chat. Do not forget to say hello in the chat if you are available. And since everything is working fine, let's get started very quickly with the very quick introduction, guys. So as you guys already know, my name is Nirav. I'm the admin and owner of the website 50eyes.com, as well as the YouTube channel 50 Eyes Market Analysis, where I have been publishing my views since a long time. I'm also the author of the book Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Waves, available on Amazon. And I'm currently conducting this webinar live. This is broadcasted on LinkedIn as well as YouTube. And this is the 66th iteration. In the previous 64 webinars, we have got 80 plus big moves. 80 are the ones which are really big in magnitude. We only count those, or the clear ones. And we will see what happened with our analysis of the 65th webinar real soon. Right. And before we move ahead with the actual discussion, let me just quickly go over the forecast accuracy page, which I like to show before we begin every webinar. I have kept a record of all the analysis and live broadcasts that I have done over the years. Since 2016, my accuracy has stood above 80%. Anybody can check that. It is publicly available. As you can see, 2016, 83.34, 17, 18, 19, 20, 88.52, and 21, 82.22. And by the way, you can just scroll down and check the date, the instrument name, and the analysis, and what happened with the video, of course. Right. This is above industry standards, because generally even a 50% accuracy is considered very high in this business. So with that out of the way, we are done with the introduction part. Let me just quickly go over the legalities before we start with the actual webinar. So here's the quick disclaimer on screen, suggesting all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing or for any other purpose, then you yourselves will be liable for your profit, your loss, or loss of profit. Right? Rest of the disclaimer you can just read on screen. With that out of the way, let's have a quick rundown of how we will go around this whole webinar. So as always, I'll start off with the pairs, the currency pair Euro USD, followed by crude oil, gold, S&P, Nifty, and BTC. Nifty, we were able to capture the leg up 18,600. S&P is currently active for a long trade, as discussed in the last webinar. And crude oil, I have already captured 2 trades on it, netting a total of around 15,000 plus for the week. Right. So let's get started with the actual stuff. Chat section. Hello, Clever. Nice to see you back again in the webinars. So first on screen, we have the chart of Euro USD, and it's actually not Euro USD. This is Euro USD, right? So we have the chart of EURUSD now on screen, and let's see what we think is happening on this counter. So first of all, we have already been able to predict this downside movement, as was discussed in our last webinar, right? We were of the view that this market is doing a flat kind of correction. There was one other outlook, but it became less and less likely as this market went lower than 1.08 level. We discussed that in the last webinar. So what currently looks to be the case is, by the way, these arrows are what I did or drew in the last webinar. Haven't really changed anything here, I believe. So anyways, what I think is happening is either we are still having one leg down for the wave 5, or it is also possible to count this structure as having the wave 5 complete over here, right? Both of those possibilities exist. Either we can actually take this as the 4 up, moving the 5 here and 3 here, basically moving this count here. Or we can say that this is the low and this is the last low. So in both cases, the scenario remains that either we have made the low here or one leg down is remaining. I am more towards the one leg down possibly remaining count until we see the market trade below this 1.08 counter, right? So as long as the market is below this 1.08, I will assume that the bearish possibility is more likely. If it trades above that level, then things definitely are changing, and I will have to consider the secondary scenario which I just discussed, that the leg down is complete here. What is that all about? Okay, so the trading strategy remains, we wait for some sideways movement on this counter. Basically, we want to see a three-wave move here, up, down, because wave 4 generally will not end very quickly. It will generally consume more time. And if we see that kind of evidence, that kind of build up for wave 4, then I'll be more confident about taking shots on this counter. So nothing much to add on Euro USD. It's a wait and watch with the specified levels, 1.08 to watch for the upside and 1.067 for the downside. If you guys have any doubts, questions, do let me know in the comment sections. Otherwise, you can just type in understood or clear or something like that. While we move along to our next chart, WTI is crude oil. It does look like, by the way, I have uploaded one of the shorts. Hey, Freezer, nice to see you again in the webinar. And thank you for the confirmation. What about you, Clever? Are you still with us? Yes, getting back to the discussion of CL, I have uploaded a short very recently, like a few minutes ago. I uploaded it. It was a momentum trade. I was able to capture the movement here. Now, a very small movement, 71.48 something to 71.78. Very small movement with 10 lot size. It was, let me just not talk and just show you. This was the trade done about 30-40 minutes ago. So as you can see, entry 71.64 something, and exit is around 71 point, should be complete very soon. It was a very fast trade. By the way, the videos and shorts are always sped up. So, but still, I think this trade lasted not more than 3-4 minutes. Yeah, I got the alert that my target is hit, as you can see in the email. And I've closed it around 71.8 something. So this netted a total of $2,190 in profit. I have also mentioned it here, by the way. So let's discuss this a little bit here. What am I seeing here is not this trade, just the whole count in general. Thank you for the confirmation, Clever. And let's just head over to the 15 minutes chart here, right? So what I think is happening here possibly is that this market is, as we discussed in the last webinar, from this point of reference, in a zigzag kind of correction. So this will be the wave A of the zigzag. This will be B of the zigzag. And this is now heading up for the C of the zigzag. And if this is correct, and if you guys recall, the title of the webinar is also crude oil at pivotal level. So if this count is correct, then we have a very good trade upcoming. This is a good enough move for something like crude oil, 72.1 to 74.65 something minimum movement I'm talking about. So if the market really does go this much, then we have a swing trade. And of course, if you know how to read the charts on lower time frames, you have lots of scalps and short-term intraday trades also available here. So definitely we will be keeping crude oil in our watch list. So now let's have a quick detailed look of the count and when can we consider this as working and when or where is the invalidation. So first of all, we have one up and two down, and yes, I have checked it on relative charts as well. The two low does seem to be holding, and currently we are heading up in an impulse. So let me just quickly run down a count for those of you who are not much familiar with the lead wave. What we are looking for is a wave C in the upward direction of a zigzag, and a wave C will have five waves inside of it, right? And each of these five waves, that is the one, the three, and the five of these five waves will again have five waves inside of it. That is what we call the fractal nature of Elliott wave. So basically, we have a one here, a two here, and this is forming a three here, which will then be, yes, this is forming a three here, which will then be followed by a sideways movement, which will form another leg up. So long story short, we are currently within this wave three, and if we magnify this wave three, it should, as I said, by the fractal nature of Elliott wave, also have five waves inside of itself. So it should look again something like this: one, two, and then a three, and a four, and a five. So we have currently our one here placed and two here. So and we are currently in the fifth leg. Now I personally think that the fifth leg has some more upside remaining, and I would like to enter longs. But the fact is that generally wave fives are possible, or they have the possibility of becoming complicated because they can become a diagonal formation, or they can even go up with a very sharp spike, like a spike on 15-second chart and then the reversal. So it will technically hit your target, but you will not be able to book your profits, right? So that's why I'm sort of out of here. The idea is that I want to see this five develop, and once it's complete, I would like to see this correction incoming, which will be for wave four. This wave four, and after that, I would like to take this leg up for the fifth. Right? So this is the play I am currently looking for. And yes, short term wise, I can again enter with small positions because the day is already in plus. As we discussed, the crude oil trade very quickly. And again, you can just check out the short by going to 50 eyes market analysis YouTube channel and clicking on the short section. So I think this concludes the play very quickly. Not quickly, I have actually discussed in quite detail. So this does conclude the play we are looking for in this counter. 74.50, let's just say. And these are the levels. If our count is working out, then we expect at least a movement above 74.50. So this is the minimum we expect. And of course, the whole trade is based on the fact that we want to see a three-wave correction, maybe from here, maybe after the market goes a little bit up. And once this three-wave correction is complete, we will put our alerts above the last high, this high, and then look for upside opportunities. Don't think that there is much to be added here. I have discussed the count, the setup, and everything. Let me know, guys, if there's any doubts, questions, or queries before we head over to the next chart of gold. And yes, one thing here, where is it? Yes, so I was able to capture this. When was it? Yeah, 30th May. I was able to capture parts of this leg down, and it was around 15,000 something profits. But then I had some losses running from Euro USD trade, which were around 2-3,000. So netted me around 12,000 over here, 12,000 USD over this part. And by the way, this trade was based completely on the downside placement of or the downside move we discussed in crude oil in the last webinar. I had a trigger placed over here, which got fired up. And when I saw it was a very clean momentum trade, so I took some entries in the middle and exited Where is it? Not actually in the middle. Middle. I was actually a little bit late, but I recall I exited some part of it here. So this was a trade we discussed in the last webinar, or based on the analysis we did in the last webinar. So two big trades on crude itself we have discussed, and not discussed. I have taken trades, and it is more or less discussed on our analysis. Now let's over to gold, and thank you, Fraser, for the confirmation. Let's head over to gold and see what it's doing. Okay, so this is fast moving now to the downside. So first of all, let's have a very quick look at what I think is happening here. By the way, there is no change here. The count is precisely as it was the last time. So this analysis is also playing out pretty much picture perfect so far. So I think what is happening here is we are in a downward movement, and this analysis suggests that we are in an impulse to the downside. Currently, we have the one complete, two complete, one here, two here, and the three is complete over here. It looks like the placement of the three. I have a little bit of doubt here. So I believe the fourth is either complete or it will continue sideways. In either case, I should have taken small, what do you call, sell side position here for swing perspective. But Fridays I generally tend to be more intraday than swing, preferably not to carry any position overnight. Who knows what kind of a news event can happen overnight, right? So yes, intraday wise also I think it's a sell short. After this webinar, I'll have a look at it unless the trigger goes or fires up during the webinar itself. So long story short, we are expecting either something like this, or let me just draw that out, or something like this, right? Both of these scenarios are expected. So that's why I said swing shorts, minor position swing shorts, and we can add on if it keeps going sideways near the peaks with stop loss above current level, which is around 1983 something, current high, I mean. So that's about it for gold. And on the downside, we are looking to take out the low of 1930 minimum, right? We can also figure out some targets. We can do the simple thing. We can draw a trend line here and a trend line here. One second. Yeah. So we have these trend lines, and what they generally will give us is the target level for the downside. So this gives us a expected target around 1916, let's say, or let's just say 1920 something. So as I said, minimum target we are expecting in 1932 to 1920 to the downside. But since it's a swing short, all positions only for me. Let me know, guys, if there is questions or doubts regarding this analysis while I check what's happening here. It is definitely a short. I should, let me see. So I've taken a very small position on it, and I'll just place an alert while we go along with the webinar. I won't want to hold it overnight, so that's why small position. So if it works out, that's good. If it doesn't work out, then I'll close it in loss. Thank you, Fraser, for the confirmation, and Steve. And as far as the counts are concerned, it does look very impulsive. Okay, let's leave it as it is, and let's head over to our next chart of S&P's 500. So SPX is again nothing new here. It is literally moving as we discussed it in the last webinar, and let's just quickly reiterate on what we discussed. So let's see. First of all, we have this point of reference from which we have the wave 1 up, and we have taken this as the wave 2 low, right? The minimum upside target where I was hoping or thinking that the market may stop a little bit was at 43, 42, 43, right? So the market has taken that out. So that means it is very likely that this market is now open for much, much, much more upside. Let's see what that means. Let's go to the 4-hour chart. So this is what we are looking at right now. One second, one second, one second. Not really. I discussed from here, but in the bigger picture, I have discussed from here. So this is what we are looking for. Wave 1 circle degree up, circle degree 2 down, and wave 1 non-circle degree, let's say dot 1. It's a little bit clearer. And the dot 2 here. So it is really the third of the third kind of situation here. So should really quickly take out 43.40 if this count is correct, of course, right? So I have already taken a trade on a related pair, so I will have to check the correlations on factor as well. But for now, I'm not taking any more trades on S&P. Will better take only intradays and then wait for bigger positions on Monday's session. So far, what we think is that more upside to be seen on this counter, right? Let's see if there is any bearish count still. We have a discussion of ABC. No, that doesn't hold anymore. Yeah, so even in the worst case scenario, if we are considering this whole thing like A down and this as an A, B, C for a B up, still it has to go higher and take out the 43.40 highs. So in all cases, I think a long bias is better suited at this point in time on this counter. Nothing really to add here. It is seemingly working fine for us. Let me know, guys. I think I was not very descriptive about S&P. So if you have any questions, do push it in the comment section. If not, just type in clear or understood or something, and I'll will. Okay. Thank you, guys. Thank you, Fraser and Steve, for the confirmations. Let's head over to our next chart, which is the chart of crude gold S&Ps Nifty 50, which will be followed by our discussion on BTC. So Nifty, again, something which worked out picture perfect for us. Last time when we discussed discount, we had, let me see one thing here. It is 1, 2, 3. So including our movements of crude oil, S&P and Nifty, we have 3 movements captured within the last week itself. Let's see what was happening on Nifty really. When we did the last webinar, my view was that from this point of reference, we have possibly a 3 leg down for an A and possibly a 3 leg up for a B. And I mentioned it very clearly that above 18,500, which is where the market had closed, roughly speaking, if the market opens above 18,500, then I'll take longs for 18,600. I could not take anything because the market literally opened at 18,600, as you can see over here. So yes, this is the case where the analysis was perfect, like picture perfect, but you can't trade it, or at least I couldn't, because by the time we came up with this analysis, the market was already closed. So yes, +1 on the analysis, but nothing on the trade side kind of event. So let's see what is happening right now. I don't think this is a B anymore. It looks like whole impulse ended here, and that this is a correction which has also ended. Since the correction is also ended here, this looks like a series of wave ones and twos taking place right now. It is going hand in hand with our idea of this market being an impulse, right? So first of all, we have wave one here and two here, and I think this is a wave one of lower degree, and this is again a two of a lower degree. So it can go a little bit more lower before taking on the next leg up. How much can it go lower? I have already marked out the levels. Let's see them quickly. So I think the primary level would be between 18,430 to 18,380. And the next level is between 18,340 to 290. So not much relevant at this point. First of all, we look out for the level which is nearer. Once we see a movement till the mentioned levels, what I'll do is I'll just reanalyze the charts, and even if we don't do anything or any hard work, we can just push an alert near the highs and look for them to be taken out for over upside entries. So with that being said, I don't think there is anything else to cover here unless you guys have anything in specific to ask. Please do let me know by typing in the question or clear or understood before we head over to our last chart of what is it, BTC. Gold is not really moving down. It looks like I may have to book a loss on this trade. Let's see how it goes. Currently, it is in wave 4 territory, but let's see. Anywho's 86. Thank you, Steve, for the confirmation. Let's head over to the last chart, BTC. No change again. This is something which is precisely following our counts. So last time when we discussed this counter, the view was that this market is heading downwards, and we have a specific count we are following on this counter, which is the A, triangle B, down C is what I was expecting. Based on that, I have drawn these arrows. Let me just quickly check what was the date when we discussed this. Last time was Friday, was on 26th of May 2023. So let's see when was these arrows drawn. 26th May 2023. So, okay, so see, I do not trade BTC, right? So that's why I did not recall. We have actually captured this trade. The market did go up as we were expecting as a triangle, and is now going down again in respect to our triangle count. So this takes our tally of number of big moves captured to 84 actually, right? So what are we really expecting here is we think we may have had the C here of the triangle. This will be the D of the triangle, and then a E. E can be very small or it can be big but sharp move, like a spike kind of move, right? So in those cases, what we really want to do is we want to focus on the leg down instead of trying to capture the counter trend move. So all these moves are quite risky. Capturing the C going up or the E going up, E is even more riskier than the C. So we want to focus on this alert, which is near 25,870 level. So if the market goes below 25,870 level, it opens for our downside targets, which are placed at 25,300 to 23,960 something. So that is what we will focus on. Alert at 25,870 and downside targets already written down on screen. So it is again, as I just said, precisely following our analysis. So nothing much to add here. So with that, I would say we have covered all the major markets that we generally cover in these analysis. Let me know if you guys have any questions or queries before we close this particular webinar. And yes, guys, this month I'll be starting the new batch, and we will have a new theme here. I'll be handing down real accounts near the end of the classes for you guys to trade on. So that will be something nice and a good addition to the training program. So those of you who have gone through my video course and are interested can send inquiries through my website. And looks like the gold trade is not gonna work out. Let's see quickly. Yep. I will have to hold a little bit because it is right at the possible reversal level for wave 4. What I'll do is I'll exit if it goes above 1968 level. Yep. So with that being said, I would conclude this webinar, and I also don't see any questions here. You're very welcome, Fraser, and thank you guys for joining in. And I'll see you guys in the next one. Welcome, Clever.